Welcome to Altcoin Insider, where we analyze charts without emotion and track big capital. Today, altcoins continue to compress while liquidity concentrates heavily in fundamental projects. We will break down whether you should buy the bleeding dip on XRP right now and why HBAR has become the ultimate magnet for smart money. Macroeconomics and smart money. The cryptocurrency market has been under severe pressure from macroeconomic shocks and uncertainty surrounding the U.S. Federal Reserve's base rates. Despite this turbulence, institutional investors are actively moving capital into stable ecosystems, completely ignoring the localized panic among retail traders. Major players are now aggressively accumulating ISO 2022 standard coins that have clear prospects for deep integration into traditional finance. XRP in a descending channel. On the TradingView daily chart, XRP is tightly trapped within a descending channel that methodically restricts any attempts at a bullish rally. Key indicators, such as the super trend and bull bear power, have moved into negative territory, signaling the complete dominance of sellers at this moment. This bearish divergence causes inexperienced traders to panic and lock in their losses at the most unfavorable price points. The battle for XRP support. Right now, the asset is testing a critically important support zone in the 135 to 137 range. Holding this line could trigger a short-term technical bounce, especially if trading volumes start to overwhelm the heavy pressure from short sellers. However, a breakdown below this line will trigger a cascade of long-position liquidations, opening the door for bears to push the asset toward deeper price levels. Historic bottom at 124. If buyers fail to defend their current positions, the next rock-solid block of support will be the 124 mark. From a strict risk-to-reward perspective, this specific level looks the most attractive for setting up a dense grid of limit buy orders. Market makers perfectly see this liquidity zone and might intentionally push the price down with a quick squeeze just to hunt the crowd's stop losses. The paradox of capital inflows. Against the backdrop of this localized price drop, we are witnessing a massive inflow of funds into XRP-based investment products that recently exceeded $1.3 billion. This creates a massive fundamental divergence between the actual demand from large funds and the asset's current bearish technical chart. Smart money is quietly accumulating positions through over-the-counter trades while retail investors dump their tokens out of fear. SEC verdict is imminent. The main trigger for the Ripple ecosystem this week will be the highly anticipated SEC decision on the launch of spot ETFs by February 26. Applications from major issuers like Canary Capital have already been added to the DTCC Clearing Corporation's active lists, technically preparing the ground for trading. Any positive information leaks could instantly break the current downtrend and send the price toward the nearest resistance block at $1.97. Success of the RLUSD stablecoin. The internal economy of Ripple is receiving a massive boost thanks to the steady growth of its corporate stablecoin, RLUSD. Its market capitalization is rapidly approaching the $2 billion mark, providing the network with the necessary institutional liquidity for cross-border payments. This fundamental shift makes the price of XRP much less dependent on retail speculation and far more attractive to the traditional banking sector. The end of the Gensler era. To understand why smart money is positioning aggressively, we must look at the monumental political shift that just occurred in Washington. Under the new SEC chairman, Paul Atkins, the agency has completely changed its tune and officially dropped cryptocurrency from its 2026 examination priorities. Compliance departments at major Wall Street banks are no longer terrified of touching XRP, which is exactly why institutional capital is flooding into these assets. Ripple lawsuit officially concluded. For years, the Ripple versus SEC lawsuit was a dark cloud hanging over the entire crypto market. Following the $125 million fine payment and dropped appeals, the company is finally operating with absolute, undeniable legal clarity in the United States. This undisputed legal status is the ultimate green light for the billion-dollar ETF filings we are seeing today. Advanced XRP technicals. The daily chart is currently forming an explosive setup, with institutional algorithms closely tracking the massive volume compression playing out on the weekly time frame. Historically, whenever XRP's volatility index drops to these extreme lows while the moving averages pinch, we see a violent breakout. The smart money knows that triggering a fakeout drop to the 1.24 level will instantly sweep months of accumulated retail liquidity. Hedera forms a bull flag. Unlike XRP, the chart for Hedera, HBAR, looks significantly more constructive by forming a classic bull flag pattern with a powerful impulse pull. The asset is successfully consolidating in a narrow corridor, confidently holding critical daily support at the 0.095 level. A decisive breakout above the local resistance of 0.104 on high volume will serve as a clear signal for the start of a massive new uptrend. Institutional accumulation of HBAR. Fresh on-chain metrics show a massive outflow of HBAR tokens from centralized exchanges, amounting to nearly $2.49 million in just a few days. Such aggressive withdrawals confirm that whales are actively moving assets to cold wallets for long-term secure storage. This kind of hidden accumulation during a prolonged price consolidation is the classic signature of smart money right before a strong market impulse. The road to 0.95 target. While our short-term technical target for HBR is 0.16, many prominent algorithmic models are forecasting a macro target of 0.95 for this 2026 cycle. This 0.95 target is fundamentally driven by the explosion of real-world asset RWA tokenization led by enterprise giants like Google and IBM on the hash graph. When multi-billion-dollar traditional assets get tokenized, the network requires massive amounts of HBAR for transaction fees, directly driving the valuation. Tokenomics face-off models. If you are holding these assets for the next 12 to 18 months, understanding their distinct inflation and emission models is absolutely critical. Ripple's monthly escrow releases are now being immediately absorbed by the market via OTC desks due to explosive institutional demand and the RLUSD launch. Meanwhile, Hedera operates on a strictly defined emission schedule, but the massive exchange outflows prove tokens are being locked up much faster than they are emitted. Battle of the ecosystems. When comparing these two projects without emotional bias, it is obvious they occupy completely different, yet critically important niches. XRP remains the undisputed leader in the conservative sector of instant interbank transfers and on-demand liquidity provision. In turn, HBAR is taking the lion's share of the Web3 market for heavy enterprise solutions, outperforming legacy competitors in network throughput. Smart money reallocation strategy. Big Capital hasn't been choosing between these coins, but rather methodically uses both to balance institutional portfolios in anticipation of altseason. Top-tier on-chain analysts note that funds are using current dips to build symmetrical, long-term positions across both networks. This primary strategy revolves around dynamically reallocating liquidity between XRP and HBAR ahead of the imminent listing of their exchange-traded products. Twitter noise and FOMO. On the X platform, a literal information war is raging between panicked retail bears and convicted institutional holders. Popular influencers are actively spinning theories about potential technological alliances between the ecosystems, heavily fueling speculative interest. The massive anticipation of new ETFs being approved is creating hidden FOMO in the market, which will spring loose on the very first green day. Psychology of the 2026 alt season. The next few months are going to rigorously test your patience and conviction, as the media claims the bull market is over whenever XRP dips to 1/37. Smart money makes its fortunes by buying these boring consolidation phases while the retail crowd is distracted or scared. Your job is to protect your capital, avoid high-leverage futures trading, and execute your dollar-cost averaging strategy flawlessly. Final trading plan. For XRP, the optimal strategy is to deploy a portion of capital at the current 1.37 level to catch ETF catalysts, leaving the main volume for limit orders around 1.24s. The situation with HBAR requires tighter risk management with a stop loss below 0.09 to safely catch the breakout from the flag toward $0.16. The absolute main rule in the current market is to never give in to crowd emotions and to trade exclusively based on confirmed technical signals. How are you currently balancing your portfolio between established enterprise coins like XRP and high-growth RWA plays like HBAR?